I am mining investor and editor of Resource Stock Digest, Gerardo Del Real, here with my partner, friend, and colleague, Mr. Nick Hodge, who's also an investor and is the publisher of Daily Profit Cycle. This is the 217th episode of our weekly therapy session that we call Investing in Bizarro World. We'll talk markets. We're definitely going to talk gold. We'll talk the Volatility Index. We'll talk about Jerome. We'll talk about Clarence Thomas. A lot of stuff going on as always, Mr. Hodge. But first and foremost, how are you today, sir?
I'm doing very well, Gerardo. You mentioned daily profit cycle there. That's what the market does. It cycles, and we've been telling you what the cycle was and is and was going to be, and here we are. So plenty to talk about.
Let's get right into it. I'm well dealing with allergies as I do every week here in Austin during this time of year, but not anything to write home about. Things are great. Family as well. Markets are what the markets are. A lot of great opportunities. Been writing checks. Been loading up on my copper exposure, as you know. Love my precious metals exposure. Love my lithium exposure, obviously with Patriot. So, no, personally, things are phenomenal. Professionally, business is fantastic. And, on the investing side of it, things are really good. I'm really excited for, the next several months and years. I think we're set up really, really well.
Me too.
All right, let's get into it. Jerome has spoken. Jerome blinked. He at the very least blinked, right? We got another 25 basis point increase. What we didn't get is the language saying that, the Fed still unanimously felt that rates and an aggressive tightening policy would continue to be implemented. And the market took that initially as Jerome saying, I'm done. I probably broke some things. I told you some things were going to break. I told you it was going to be painful. Everything is not awesome anymore. We've been saying everything was not going to be awesome. You've been spot on with this. But look, the regional banks are down 78% in the past 4 months. We've had 4 negative days this week in the Dow. We're only 4 days into the week, so you take from that what you will. And then we have to talk the volatility index. We said last week, listen, we don't think the bank financial crisis is over, and volatility index had been so low for so long that was bound to go higher. We didn't know what it was going to be, but we knew it was going to be something. Here we are. All of that's played out beautifully. And you know what else has played out beautifully? The gold price. It's looking solid. So let's start with Jerome. Let's talk policy, and then we can run down that list of items that I just put out there.
I think we even gave some free picks last week, which you certainly got your money's worth from. Revival Gold was significantly sold off, and then had a couple of up days since then on the back of this higher gold price, and on the back of you and I telling people that it was significantly oversold. The quarter point rate hike was priced in. Like I've been saying since last August, there's going to be no pivot. He was telling you as much, like you said. He said there's going to be pain, and now the pain is being felt. The consumers getting pinched. The banks are certainly getting pinched. And if you look at it on a market cap failure basis, the amount of bank failures we've had now in 2023.
What year is it? Is great. That's such a 2023 quote. Wait, what year is it?
Rivaled what we saw in the 2008 GFC, and hardly anyone's talking about it outside of the Bloombergs and the FinTwit, as it were, those people who were involved in the markets on social media. This isn't headline story on the evening news yet, but it could be as these banks continue to go bye-bye. It seems like every day there's another one that's on the cusp, or another one that's down 50% in pre or post-market trading, and it's a different sort of crisis which we've been over, so I'm not going to go through that. This isn't their investments are going belly up, or the
just them.
Right. They're having runs, and they can't cover their cash because they've got it tied up in bonds that are a lower price than when they bought them. So, and I think the Fed likes this. But if I put on my conspiratorial hat for a second, we all know that in conspiracies in the past years, many of them have been proven to be true. The Federal Reserve, which is neither federal nor has reserves, is it likes it when the banking power is concentrated, right? And that's why you've seen J.P. Morgan sort of emerge as this third arm, right? You've got Jerome at the Fed, you've got Janet at the Treasury, and you've got Jamie over at J.P. Morgan, and they're giving him deals, right, to scoop up these banks. They're even skirting some of the written rules to allow him to absorb these banks at cheap prices, and that gives them a streamlined pathway to do some of the things that they want to do, right? If you can have the banking power concentrated in just a few big names. So the even more conspiratorial among us, and not necessarily me per se, we're saying things like, this is how they usher in the policies that they want, whether that's central bank digital currency or, whenever it might be. It's easier to do when you've got just a couple of large institutions that are on side with you rather than this whole fractured many thousands of different branches of regional banks. And so I don't think they're too worried about it going away. What the market is saying now is that the pause is here. And so I want to be clear that that's not a pivot. That's just the cycle reaching its natural progression, right? I've long said that, getting into Q2 and Q3, we would see that pause. We would see the recession manifest. And then by the fall, you might see some rate cuts. Well, now that's where we are. It's not because there was a pivot. It's just because the cycle cycles, and that's what we've cycled to. So we're getting deeper into it. We're a month into Q2, and there's some value that's starting to be had out there. You mentioned the market's been down 4 days in a row.
The Dow's negative for 2023 as of May the 4th today. May the 4th be with you.
Wow, may the 4th not be with the broad-based equities, as it were. And so, look, what we've been saying continues to play out, and I'll be taking advantage over the next couple of months to get back into the coppers, which you mentioned at the top of this podcast, right? Like, copper's below $4 for 2 weeks now, and we're going to use these as opportunities as we head into the back half of the year. And certainly, gold is loving the uncertainty and the volatility. And the long end of the curve starting to fall off because of that recession. So we can talk about that. But what about you? You always ask me at the top of the hour, about the macro stuff, but I know you follow it.
Yeah, I follow it, but I tend to just really follow as it relates to my resource portfolio. That's my niche. That's my bread and butter. That's where I allocate 99.9% of my capital. So look, I'm loving this opportunity to bolster my copper positions. I've been really aggressive. Buying into a couple of names that, did some financings that I think they otherwise would not have done if the copper price wasn't below 4 and the markets weren't so uncertain. I've been able to use, weaker markets to take advantage of being able to write larger checks for myself, subscribers, and friends that we otherwise, I don't think we would have been able to write without really getting the price at more unfavorable terms. So extending my copper exposure, I take a 1 to 4 year view on those speculations, right? For those checks, those are shares that will just sit there along with the warrants that come along with them. And I'm going to let the pieces play out. I think we're headed for a copper market here in the next year and a half that is going to blow the socks off of people. I see $6, $7, maybe even $8 copper over the next 3-4 years. I could be way off on that. It could be $5 and $6. $5 and $6 copper is going to do very well for me if either of those companies that I wrote checks to make a discovery of significance. One already has, 20% of an asset carried into production by a major company that's just working through some permitting hurdles. So, if that works out, that'll be a 20-fold return on my capital. The other company owns an entire basin of copper, gold, silver. I think that's a 25-fold return over the next couple of years. And I'm thrilled to have the position that I have there. So I like that for the copper space. I like seeing the lithium spot price, which, again, isn't the most consequential lithium indicator on the market, but I do like seeing that bottom, and it looks like it's consolidating. So I see a lot of the lithium names are bottoming. That includes Patriot Battery Metals. It includes the Lithium Americas. It includes the Alchems. It includes, several names that have had charts that were a little not so flattering the last couple of months. Those look to be stabilizing. So like copper, like lithium, we have to talk precious metals. Silver looking good. Breached the $26 level today. Gold looking phenomenal. We talked about gold for the last 6 months. First, we were bored, and then we said there could be a technical break below the 1764 level, I think it was. And if that happened, we said there's a good chance it might touch 16, and it could go all the way to 15 if you look at that chart where it had to retrace. It held that support beautifully, and when it held that support, that's when we started saying it's not going to be a moonshot. It's not one moon for gold, but it is going to go technical here, technical level here, technical level there. It's going to staircase all the way up. That's exactly what gold has done, and it's done so beautifully, putting in higher highs, putting in higher lows. I think we're going to have a ripping gold market here in the second half of this year. We're in May. June's next month. Gold touched 2063 earlier this week. It's at 2050 right now. That's with the dollar index that's still near 102. That's impressive, folks. For that dollar index to be at 102 and gold to be at or near record all-time highs is impressive to me. I love silver as a precious metal now. So that's what I'm looking at. I mean, the setup is exactly what we thought the setup was going to be. Multiple commodity bull markets really starting to position themselves for the next leg higher. Uranium, I got to touch on uranium a bit. Touch the 54 level. It's between 53 and 54 on the spot price. The disconnect in the uranium equities right now also presents a pretty compelling opportunity for the better names in the space. So look, I get subscribers that write in. They say, why isn't Patriot making new highs despite phenomenal news? Why is copper below 4? Well, we know it's because we're in a recession and it's a global thing. And, spending and deflation is very much, deflation is a part of where we're at now. And spending has been curtailed and will continue to be so for the next little bit. But it looks great midterm to long term. So I'm happy. I'm excited about all the markets. The boring time is when you should be allocating capital, folks, not when everybody gets excited. That's where I'm at.
Yeah. Not too much to add there. I will say that, you should have been allocated to gold. We've been talking about it now for months. It actually hit like 2081 intraday. It didn't close that high, but that's the highest, on my chart that gold's ever been.
It's a long time, folks.
Some of those names that we were mentioning on this podcast in recent weeks, and that I told you, I had made a new gold recommendation in the monthly letter. That stock was up 10% today after reporting earnings, and people come running to the gold space. There's still some catching up to do. If I look at a chart of the gold and GDX, for example, over the past year, gold's up 10%, GDX is flat. So, forget the leverage that the gold stocks provide. They haven't even, outperformed on a one-to-one basis, which tells me there's a lot of upside ahead for the gold equities. And you couple that with this money that's coming out of these banks and the fear that is surrounding banks, and it looks pretty easy for money to come into gold. And then you look at the size of the gold market, which we often talk about, smaller than, like an Apple, for example, with a $2 trillion market cap. So, lots of things are looking good. The volatility we didn't mention is, if we're just talking about things in the market, spiked up over the past 2 weeks. I had told you last week that it touched a 15 handle and was, looked very suppressed to me. I had a feeling that, volatility was going to increase as we work through earnings season, which we're still in, and we'll actually get Apple earnings today after we record this. So those will be out long before you see this podcast. But it's important because, I think that Apple is the largest percentage of the S&P that it's ever been in, right? And so goes Apple and some of these big tech names, so goes the rest of the market. And that's one of the reasons that they've been able to hang in there over the past couple of months. So that's starting to soften now. You're seeing the layoffs mount up, and that volatility has perked back up from 15 to 18 or 19 or so on the VIX. And again, the uncertainty is good for gold and precious metals.
You said the L word, layoffs. It's happening quick. We have to talk AI. We have to talk IBM. We're talking a blue chip, multinational, multi-billion-dollar company. We're not talking about Gerardo's family office or a boutique shop here. Look, IBM has been very public that they plan on using AI to cut or replace 7,800 jobs over the next 5 years. The company says it wants to use AI to replace 30% of back office jobs. If IBM is using it, if IBM is leading in that direction, I can guarantee you the Googles of the world, the Amazons of the world, the Apples of the world are not too far behind. I have to wonder with, the slate of Amazon layoffs here over the last 6 months, how quickly this develops and how consequential it is. And look, AI has a lot of scary implications for our economy. There's a lot of exciting applications for the technology, obviously, but societally, there's going to have to be a shift in retraining a lot of these back office jobs that just aren't going to make sense to have a human in front of in 5 years, in 6 years, in 7 years. And so I think that's a space to watch. It's not one that I'm very well versed in, but I can see and catch a trend pretty well early. I'm halfway decent at that. This is one that could have material consequences to how our economy evolves over the next decade or so.
Already is. There's a company called Chegg. I don't know if you saw that story this week that provides what they call educational services. It's really a way for students to not do their homework. But it's a publicly traded company. And they reported earnings this week, and they said that ChatGPT is having a material impact, which is what you just said was going to happen. There's going to be material impacts from this on their business. Instead of using the Chegg services, that's CHEGG is the name of the company, students are turning to the ChatGPT to do their homework, to provide them with answers, to write essays, some of the same services that Chegg provides. And so they had their earnings this week. They had the conference call, and the stock swiftly sold off, 40 to 50% in a day, because they said that their earnings are being impacted by students using the ChatGPT. And so I'm not, hugely well versed on it either. My gray hairs are multiplying every week, if you haven't noticed. But I've used it nonetheless in the business that we have to write outlines for articles, to come up with subject lines, and to come up with, descriptive sentences that, summarize an article and things like that. And it's quite astute. I've even used it to, I was asking it the other day, tell me about the assets that SSR mining has and where they are and how big the resources are. And, within seconds, it's telling me, SSR Mining has these assets in Mexico, and these assets in Canada, and they have a resource this big, this many ounces of gold or whatever. And it's crazy. I mean, how good it is. It's not just a Google result, but that's going to continue. And it's also a guise. We sort of touched on this last week, right? And I told you how much AI was being mentioned in the earnings calls of
Sure.
Microsoft and Google. And it's sort of being tossed out there now, like .com in 1999 or 2000, companies are saying we're going into AI, or we're developing a ChatGPT competitor, and it's having a positive impact on their market cap, as opposed to the Chegg example that I just mentioned. Even Elon the other week was saying that he was working on something for artificial intelligence. But this is just staving off the economic reality, or the economic gravity, that earnings are slowing and growth is slowing because of this recession that we're currently in. And sorry, now I'm wondering. We didn't mention GDP last week, which has slowed down. It wasn't a negative number, but the direction is slowing from over 2.5% growth in Q4 2022 to I forget what the number was. I think 1.6% or 1.3% in the first quarter, and going to be similarly slowing growth in this quarter. So on the one hand, I agree with you. AI is real, and there's going to be significant implications for employment and the way we do things over the coming years. And at the same time, right now it's being used as sort of a ploy just because it is so popular.
Let's talk about using people as ploys. This Supreme Court Justice Clarence Thomas story and Harlan Crow, Texas real estate developer story, just keeps getting better, right? Back in the days, like in 2002, I think it was, Clarence Thomas felt compelled to disclose $2,000 in gifted tires to himself. What he didn't feel compelled to disclose is that his mom lives rent-free at one of Harlan Crow's homes that he bought, that his nephews had his college tuition paid for many, many years, that he's taken luxurious vacation trips, including on Mr. Crow's plane, his yacht. I could go on, but it's a story that, look, I am sure other Supreme Court justices have failed to disclose certain material gifts. This goes a level beyond that. And look, let's hold everybody accountable. I don't care what the background is. I don't care what side you lean politically. Let's apply the same rules and standards to everyone. But this is egregious, man. This is just straight up Supreme Court pimping at its finest. I'm curious to see where this goes. I mean, it's a lot, Nick. It's a lot. Any thoughts on the state of our Supreme Court justices' integrity as it relates to accepting? These aren't gifts. Come on, man. Your mom lives rent-free at the house for like ever?
I was just going to quote Biggie and say, now my mom pimps a back with minks on her back. Go you, Clarence.
Go you, Clarence is hilarious. The great poet Christopher Wallace.
I do have things to add. I mean, not only does he not feel compelled to report those things, the Supreme Court justices are feeling not compelled to go testify in front of Congress, right? There was one the other day, and I forget which of the justices it was, because, as you know, I try not to pay too close attention. But, Congress said, hey, we'd like you to come in and testify about some of this stuff. And he was like, nah, I don't think I will. And so that's, sort of how they're feeling at the moment, not even wanting to get close to any sort of accountability or, seeking of truth. And that's the state of where we are with our institutions. Though I will say, outside of the Supreme Court, I was surprised to see a co-sponsored bill between Miss AOC and Matt Gaetz this week to ban Congress from trading in stocks, because that obviously continues, right? You were just talking about Clarence, Miss Feinstein from California, who's about to retire before stout. I mean, she's got
dying.
She's got multiple homes that are worth, several tens of millions of dollars, right? And it's like, how do you? And just like Pelosi and all the people that are cited getting rich on their low six-figure salary, right? I mean, perks of the job. And there was just an example in the past weeks with these regional banks where I think it was a congresswoman was selling regional bank stocks and buying JP Morgan before they were given the deal to absorb some of these companies. And so that continues to be rampant. And so kudos where kudos are due. That was strange bedfellows there with AOC and Mr. Gaetz. Is it Gates or Getz? Anyway. It's like Leo Getz from oh God, what was the movie?
I doesn't deserve to have his name pronounced correctly either, so don't worry about it.
Whatever you want, Leo Getz. Lethal Weapon, that's what it was. Joe Pesci.
That's hilarious. You're full of quotes today, Nick. You're full of quotes today.
Well, if I could get them accurate, it would be even better. But anyway, good to see that bill proposed. I don't think it has a snowball's chance in hell of getting through both houses, because they would be taking away their, golden goose.
Yeah, no, I absolutely agree. I don't think we talked last week about the changing landscape in media. We got to talk that a little bit. It was quite a week last week with Tucker Carlson, which I could care less about. I wanted to punch him in the mouth before for some comments he made about going up to kids. And I was like, if you ever have any of your little listeners come up to one of my kids, you're in for a rude awakening. But look, equally obnoxious to me is Don Lemon on the other side, and both of them got fired, for whatever reason they got fired. Again, I don't follow it too closely. I don't really care enough, but it does speak to a changing landscape. It was amusing to me, as always, how much people cared. It was interesting to me that one is very left-leaning, Don Lemon, and one is very right-leaning in Tucker Carlson. But things are a-changing, right? In the words of Bob Dylan, the things are a-changing.
I think Don Lemon said that some lady politician was too old to be running, or women.
So she was out of her prime in her 40s.
Yeah,
that women are no longer in their prime in their 40s.
There
Which
you
is that
go.
the case, Don? You might not know because I know you don't lean that way, but anyhow.
Um,
He would be better. I mean, Mr. Lemon would have been better qualified had he been opining on men. I'll just leave that there.
Interesting. I did not know that. Him and Anderson. No, I don't watch either or any of the cable news for sure. If I turn on the news, it's normally on a weekend morning, and I catch the local news just to see what's going on. But it wasn't just those two people. And you wonder if there was something else going on, right? Like Fox had just had that settlement about the slander with the voting machines, and
We
I'm not
didn't
sure
talk
what was
about
going
that.
on at CNN. But there was other media corporations going belly up too, like BuzzFeed declared bankruptcy in the past couple of weeks. I think Vice is preparing to do the same thing, and you wonder if some of that is your AI already coming in there to write stories and how much they're using that. But other than that, I haven't followed it too closely. Other than I'm interested in where Tucker ends up because
Sure.
he had a much wider viewership than Don Lemon, and he's sort of that, cult of personality, right? Like, is he going to be Trump's running mate? Does he have political ambitions? He was already offered like $100 million deal to go to some other media outlet. I forget the name of it, but that's what I'm interested to see. Like, what's his next move? Because he'll put out a video and it'll get like 5 or 10 million views on Twitter in 24 hours.
Maybe he wants to be a newsletter writer.
Maybe. I was thinking, I actually thought about that. I'm sure Agora sent him an email.
What are you watching in the markets this week, Nick? I don't think there's anything outside of what we've already touched on that's too urgent or top of mind for me. What are you looking at?
No, I want to see how these earnings continue to play out. I'm increasingly interested in the debt ceiling, which we've mentioned a few times here, and it's starting to get more play in the media. That's coming up very fast. I've already seen. And
I haven't even thought about that.
Krugman was out this week talking about the minting the coin again, right? The $1 trillion platinum coin. What's your thought?
My new thought on the debt ceiling negotiations, and it's a revised thought. A couple of weeks ago, I said, come on, Nick, these guys and gals, the one thing they agree on behind the scenes always is printing more money, right? They don't want to interrupt their vacations. They don't want to interrupt the flow of things. It's just political theater. I actually sat there and thought about it after, I think it was 2 episodes ago. I think this political class on both sides is stupid enough to push the button. And the reason being, I think they can each sell it to you're 100% spot on right. I want to give you credit. I think they're both dumb enough to do it because they both think they can blame the other party enough. And their parties are so politicized and it's so tribal that each of their bases will believe each side and what they're hearing. And so there may not be real political backlash for just pressing the button. And that would truly be some force-turning stuff. So, revised opinion, I agree with you 100%. This one might happen, y'all. This one might happen. They might do this one.
It's a big deal. And look how many votes it took them. And I know we discussed this on the podcast. How many votes did it take to get a Speaker of the House? I mean, that's like something
14 or something
that's
like
something
that.
that's like quasi-procedural. If they're going to be like that over the Speaker of the House, you got a big issue like the debt ceiling, and they're going to be just as wanton about that, right? So, and the credit default swaps like continue to get bid up, right? Which is the market saying like, they could not in the game of chicken, they could not swerve, right? The market started to price that in a little bit. And that would really send off the next phase of this bear market, and it would really be good for gold as well. And so things are lining up. And let me be clear, it's like they could just be in default for a tiny bit, right?
Sure.
Like even if they do default, it could be like a tiny default, like we default for a couple of weeks before we finally do figure it out. And then they raise it, and then things go back to normal. But it could definitely happen.
Yeah. Yeah, no, definitely something to watch. Interesting. We'll see how that develops. Y'all should have some gold by now. You should have some gold exposure by now. We've been saying this for quite some time. And, I'll say this also. If you're going to add to your lithium positions, that includes the explorers and the developers, this is probably the time to do it. I think we're going to start getting some more M&A in that space. I think we're going to start seeing some companies start to break out again. We're also getting into the part of the year where a lot of the companies that have had a lot of attention and eyes on them in the James Bay area specifically they're starting to ramp up and actually have some drilling programs as opposed to just samples and field work, which look is critical and it's important. But, everybody's into it to see what's in there, right? To see the truth machine turn. Truth machine is going to start turning for a lot of these players. Q2 Metals is getting ready for a 10,000 meter program here in the next couple of months. Ophir Gold is waiting for that program, I believe, before launching a program of its own because they have neighboring properties. Patriot, as everyone knows, has one of the most aggressive programs this year. And there's a new company. There's a gentleman that I interviewed earlier that's the CEO of Lift Power, and that's a company that's undertaking a very, very, very aggressive drill program at its Yellowknife lithium project, which I got to say is really, really interesting to me. I encourage everyone to take a peek at Lift Power. Massive land package, historic drilling, pegmatite outcrops that outcrop 4 kilometers of strike length, sample grades that are good, mineralogy looks solid, met work from the late 80s looks really, really good. $330 million market cap, give or take a bit, 50 million of that backed by cash. So there's your freebie for the week if you want to do some due diligence on an off-beaten path lithium player that's going to be very, very busy this year.
You said everyone should have their gold. I still got to send you your little Credit Suisse thing I got so you can always remember the banking crisis of 2023.
Love
I'll
it.
get them in the mail here soon enough. You
Love
know how
it.
I'm going to do it? I'm going to tuck it inside one of Mr. Dine's books, and I'm going to send it via media mail. That way it's cheap to send.
Nick always looking for a bargain. I'm always supposed to remind everybody that you should be subscribing to dailyprofitcycle.com/subscribe to never miss out on our updates and our market commentary. Nick, anything else you want to get off your chest?
No, Mother's Day this weekend after you watch this. Be sure to get that done.
Make those reservations, get those gifts, make those kids write those cards if they're not doing it on their own. Very, very, very important if you're lucky enough to still have your mom and or moms that are great moms around you. I'm Gerardo Del Real along with Mr. Nick Hodge. This was episode 217 of our weekly therapy session that we call Investing in Bizarro World. Mr. Hodge, send us off with some words of wisdom.
No words from me. That's it. I gave them to you already. See ya.
Hey there, you independent-minded investor. If you like this video, make sure to tell us so by clicking the like button below. Subscribe to our channel so you never miss another one. And share it with everyone you know on social media. You can also click the link in the description below to check out more information-packed videos just like this one. Thanks for watching.